All right, Africa's largest economy, Nigeria, has exited recession, posting fourth quarter growth of 0.11% in the 3 months to December 2020. For the full year, the economy contracted by 1.92%. After growing by 1.87% in the first quarter of 2020, Nigeria slipped into recession after successive economic contractions, 6.1% in Q2 and 3.62% in Q3. Joining me live in the studio is the host of Arise Exchange, Bosun Omofaye, and also we have the NASG senior economist, Wilson Erimebo. Wilson, what do you make of these numbers Bosun has read out here? I had you on the show, I think about a week or two ago. You had a 2021 economic outlook where you had advice for what Nigeria had to do to get through this pandemic. Well, what do you make, Wilson, please? What are your thoughts?
Well, I think first thing is to note that we are out of the recession, which is something good to mention. But again, if you look at the structure and in the nature in which everything, the numbers played out, just as Mr. Bosun mentioned, and I remember the discussion we had in a couple of weeks ago. If you look at the 2016 recession, crude oil led the Nigeria into that recession and brought Nigeria out of that recession because we experienced the positive growth when crude oil rebounded. So, but this time the story is different. Crude oil is still displaying significant negative growth. In short, if you look at the fourth quarter, we had about minus 20% decline in crude oil output, in the oil output in the mining and quarrying sector. But in terms of an annualized figure, you have a minus 9% decline. So that tells you that the nature of this recession is quite different from what we experienced in 2016, especially because of the impact of COVID-19. And also something to note is that if you compare the fourth quarter with the third quarter, you'd notice not so much difference in terms of the number of sectors that recorded positive growth. So I'm talking about now the 19 major economic sectors. So you had, fast growth in ICT, healthcare recorded about 3.4%. Agriculture, had one of the highest growth rates we've seen in recent times. Construction also, recorded positive growth. But again, one thing to note is the magnitude of decline across some of the major sectors. It's reduced in the sense that, for instance, food, transport had, recorded at some point minus 40% decline. But in the fourth quarter, it declined, but still that contraction reduced. So you'd see that across some of the sectors that recorded negative growth. Just a few sectors. Real estate, quite surprising. One of the sectors that, recorded positive growth in the fourth quarter of last year. So what it basically means is that there were expectations that many people had said we will exit the recession in 2021, but that has happened faster than expected, which is something good.
Thank you for that, Wilson. So, Bosun, where do we go from here? How do we capitalize on this now? Is it more intervention? How do you see it?
We just need to look at the downside and the upsides. Air transportation, I think it was 4 billion.
Right.
And we'll have
the stimulus, right, yeah.
To keep the staff in place, make sure there are no job losses, and of course that the government continue to collect its own personal income tax, by the way. There's no free lunch.
Correct.
Yeah. So even if it's school feeding program, someone is paying. So we need to keep the air transportation back, a major contributor. The industries and manufacturing and the whole gamut of construction and mining and quarrying, as Wilson was saying, just in the water. We need to get that back on track. We need to put a whole lot more on this. The whole spending into rail transportation and getting the Lagos, about whatever it is, on up to Niger, look, that's fine. We need to get transportation back on track. When you're looking at the first quarter 2021, I'm sure it's going to be a whole lot better for road and rail transportation than it was in Q4 and for full year of last year, unless, and God forbid, and heaven, nature smiles on us again, we don't have another variant, we don't have a major implosion of the COVID-19 infestation in the country. So that will keep transportation back up and running across the entire value chain. The accommodation and food services, the food services is coming back a bit, but hotel accommodation and all of that, tourism, whatever, is still in the water. Yeah. So don't let us worry too much about that. Let's focus on these areas that we can be a game changer, which is agriculture and the entire value chain within it, which includes forestry, crop, animal husbandry, whatever it is.
Right.
We can all get that right, okay? And then we focus on human health. I'm very interested that human health GDP grew 3.05% in fourth quarter and 2.23% in full year. We can take that up higher. Health is wealth. We need to keep that in mind, that health is wealth. So now that we are mainstreaming healthcare, R&D through the central bank, through whatever, that is good. The whole Infraco thing, and I'm going to bring it in here, the whole Infraco thing, they shouldn't sleep on that. That 1 trillion should come on the table, and we should prioritize sectors like education. So I'm going to go to education. Education GDP contracted 11.43% in Q4, and for the whole year, negative 13.57%. So our education sector is not in the water, it's at the bottom of the ocean. We need to bring it back up. We need to do it for our children, we need to do it for our youth, we need to do it for education. Folks are voting out of this country and going to UK elsewhere and taking our scarce resources here elsewhere. That needs to stop. We need to focus on that as well. Indeed. So how we spend infrastructure money into education is key.
Fantastic stuff. Wilson, thank you for that, Bosun. Bosun just talked about the 4 billion naira stimulus for the airline sector. We had the CEO of Air Peace, all right? He said that one engine alone for one plane costs about 10 billion. So we were earlier on Newsday, we're talking about the scale, not just the speed of these intervention funds, but being able to spread this across sectors. If you can, we have to go to break real soon, about 2 minutes or so. Can you speak to how much more is needed in terms of these sectors and how much assistance is needed from government to try to get them resuscitated?
Yes, I think all across the world, I mean, government intervention is key, especially at this time, but there's there's a limit to how much government can intervene, especially when you look at Nigeria, you look at the fact that, it's not just about debt this time, it's also about servicing those debts. Debt has been increasing. Just in the first 9 months of 2020, we added 4.8 trillion naira to the public debt stock. And even more, if the Q4 numbers come out, it's going to be much higher than that. So there's also a limit as to how much government can, support some of these ailing industries. But that said, I think one of the key areas and one of the things we've highlighted over time, at the NESG is the fact that we must also see how we can leverage and incentivize private capital into driving, output across some of these key sectors. Yes, there is, and if you look at the numbers, as at November, the world had about $17 trillion worth of capital invested in negative yielding assets. In Nigeria, we've been talking about liquidity problems in the last few years, telling you that capital is not necessarily the problem. I mean, we've seen how interest rate has fallen significantly in the last 1 year. So the problem actually, and where the solution lies, is being able to have an investment environment that attracts and retains private capital. And I think that's where one big issue that I think we need to start looking at across all these sectors. Look at manufacturing, for instance. It recorded a negative growth. And this is a sector that has so much huge potential to solve even our FX problems as a country. So I think it's not just about government intervention alone, which is also very important, but this time we need to start looking at our policy environment, macroeconomic stability, inconsistency, investment in, and having sectoral reforms, to open up some of these sectors and attract those investment in negative yielding assets into productive sectors of the economy.
Fantastic stuff. All right, it's the Global Business Report. We're on Arise News. We're talking about the latest GDP figures from Nigeria. We have Bosun Omofoye and, of course, Wilson Erumabo with us. We'll take a break. We'll be right back to continue the conversation. Welcome back to the Global Business Report on Arise News. We're continuing the conversation. Let's recap now. Nigeria has exited recession in the fourth quarter of 2020, growing by 0.11%. Full year, the economy contracted by 1.92% in 2020. Let's look at the 4 quarters now. Q1 again, Q1 2020, 1.87% growth, and then that's when the recession now hit in Q2, where we contracted by 6.1%, contracted again by 3.6% in Q3, and then this is what we're now talking about, the fourth quarter of 2020, where we've, surprising many, including myself, I have to say, getting out of recession and back to positive GDP numbers. Now, we have, of course, senior economist, Nigerian Economic Summit Group, the NESG, Wilson Erumabo with us. We also have our Rise Exchange anchor, Bosun Omofoye, with us as well. Gentlemen, I want to talk about inflation. Let's put up Nigeria's inflation figures first for our viewers. All right, so year on year, let's keep these figures in mind. Wilson, I want you to look at this as well. Headline inflation 16.4, food inflation 20.5. Core inflation, 11.85, all increases from December. Let's put up South Africa. They just released their inflation figures just yesterday. Let's take a look now. All right, so headline 3.2%. Food inflation actually dropped in South Africa, and then core inflation 3.3. Bosun, let me start with you. Yeah. Is this where we need to get to? Is it Dave, you talked about South Africa earlier on Newsday. We're talking about their problems, that they have the highest number of COVID cases in the country. What do we need to do?
You need food. You're talking about inflation. Food inflation in Nigeria at just about 20%. Food and beverages, GDP in fourth quarter, positive 2.15%. Food beverages, full year, 1.5%, still positive as well. Look, the whole, if you put agriculture together into food beverages sector on one side, then you put the whole transportation, electricity, 2.9% negative for full year, negative 2.5 in Q4.
And the tariffs haven't even fully kicked in yet.
By the time you put it all together, you find that the road, rail, air transportation, electricity, energy, and everything makes nonsense of everything positive you will get on all your food, beverages, and whatever.
Right.
Again, inflation will also continue to rise. Look, we have a whole lot of problems here. From FX to this, and that. But you see, when you look at your accommodation and food services industry, when the lockdown, a whole lot of things happen. A lot of the folks who will take friends, girlfriends, wives, children out on weekends start cooking at home.
Yes.
Right? So that is one issue you have to deal with, food and inflation and what have you. There's a whole lot of contraction within the economy and a whole lot of structural rigidities, including the whole problem of insecurity. Look, we are in a very state of emergency here, that we're getting to a point of declaring insecurity a state of emergency, as well as food, as a matter of national emergency as well. We had some drought and flooding last year, remember?
Kebbi for one.
So those also contributed to our inflation. So don't let us just blame insecurity. We have a few other issues with weather conditions.
Yes.
There is food inflation all over the world right now. But we have a peculiar situation in which we are own enemies from within. Enemies within. Well, that's what the movie is sometimes.
You have all the movie. You did James Bond earlier. Now you got all the movie references today.
Books as well. You know, we call the enemy within.
Yes.
So we're just the enemy within ourselves, in which instead of concentrated on socio-economic projects and development, we're busy visiting each other. The governors that should concentrate on ruling and taking good care of their state government, but because we can't just fix simple things, 4 or 5 of them are moving across other regions of the country, trying to mend fences, trying to quell fire. So the time they should have spent in fixing the economy, in fixing food inflation, everything within their domain, we're busy now trying to prevent a total outbreak and breakdown of law and order in the country.
Right.
This will come back and bite and hurt all of us. Make no mistake about it. Because when we spend more time on fixing it and trying to stop little things that we ought to have not happened in the first instance.
Right.
And we can't just agree whether we should allow animals or cows, whatever I name, to go open grazing, to roam around or not to roam around. I don't think it calls for such issue in 21st century as a developed nation and the leading one in Africa. The bottom line is what you're seeing right now, and you point at inflation. This GDP, like I said before, is a fire brigade inflation, in which it's a paramedic inflation, a GDP, if you want to put it that way, paramedic, in which you try to stop the bleeding and the patient from dying at the spot of the accident. It's not healthy. It can't walk on its 2 legs. This economy is wobbling. But what has happened is that we had the paramedics. Now we need the medical team who will perform surgery and keep the economy in ICU, intensive care unit, and quickly move it to recovery phase. The Minister of Finance says few days ago or last week that we're in a recovery phase. I want to agree respectfully and disagree respectfully again with the Honorable Finance Minister that we have a whole lot of more work to do with food inflation at 20%.
Indeed, indeed. Well said, Wilson. Well said. Wilson, let me bring you in here. South Africa inflation versus Nigeria. How are you seeing where we need to get to structurally, piggybacking off what Wilson has said?
Quite interesting, analogies with the patient and the movie.
Wilson has the best analogies.
Yeah, quite interesting. But I think inflation. You see, inflation is the disease or the enemy of the poor. So it affects income and it affects, welfare.
I know, right? You guys, two of you are on fire today.
Yeah, it affects welfare, of the general populace. And one thing with inflation, and if you look at the trend in the last, two years, you'd notice that inflation started rising when the borders were shut. From August, September, November 2019, and it maintained a consistent increase over time. So it tells you that, some of the problems we are facing now are things that I believe could have been avoided. But that said, I think we also, sometimes we often, we want to talk about GDP, how good it is, but sometimes inflation is one key indicator that, pinches hard on citizens. And I think imagine we can't even deal with a cattle problem for almost 4, 5, 6 years. And that tells you that, people, in 6 years is enough for a country to move from one stage of development to another. If you look at history of economic thought, if you look at the fact that we have a technological revolution going on, countries are leveraging on technology to leapfrog. So I think there's a lot we need to do. We need to get serious and address some of these basic issues that takes Nigeria back decades. If you look at the World Bank report, 8 million Nigerians would be added into poverty in 2020. This is not GDP. This is beyond GDP. We're talking about how can we make economic growth inclusive so that when the economy expands, the average Nigerian can feel that. So I think issues of insecurity, whether it's issues of FX, value chain, fixing the agricultural value chain, wastage,
leakages,
and all of that are very key things that needs to be done. Adding to the fact that, now we've opened the borders, there's a lot of expectation, but we need to start producing and exporting to some of these countries. Nigeria needs to earn FX. It's not just only about managing. We need to produce and export to other countries so that we can solve some of these FX concerns that, because of course, manufacturers rely on inputs, and when you have a rate, you have different rates in the market. These are issues that, we've been talking about over time, and I think the government needs to step up and address some of these,
All right, I think we've got about a minute to go. Boston, let's have the last word.
But my heart bleeds when he talks about exports. Lagos, for example, accounting for 80-90% of exim in Nigeria. And the Lagos-Ibadan highway there's nothing to write home about.
Right, exactly.
Then Badagry to Apapa is also
has its own
Then
issues.
You go all the way through to Ikorodu, it's the same mess. Right?
Right.
Then you have the roads in and out of Apapa itself in a total mess. Any other country would have collapsed too long ago. But why the Nigerian economy has not collapsed defies all logic. I'm going to borrow that phrase from one of Nigeria's former military head of state.
He is, of course, Boston Omofaye, host of Arise Exchange. You can catch him 7 p.m. West African time. Wilson Emrimo, senior economist at the NESG. Thank you so much, gentlemen, for joining us to discuss Nigeria's economy and how we can grow.